Soldiers, look at the battlefield today. It is a sea of red. Bitcoin is down nearly 6%, trading at $84,000. Ethereum, BNB, Solana, almost every major asset is bleeding between 4% and 8%. The average investor looks at this screen and sees panic. They see loss. They see crash. But in the war room, we see something different. We see opportunity. While the crowd is blindly selling, we are going to zoom in. Because hidden within this red chaos, there are specific structures on AVAX, XRP, and Link that are signaling a massive reversal. Today, we are going to dissect the charts to see exactly where the bottom lies. Before we dive in, I am a strategist, not a financial advisor. These markets are volatile. Everything I share is for educational purposes only. Always manage your risk and do your own research. Now, let's find the diamonds in the rough. War room, let's hunt. First, we march to Ethereum. Soldiers, I will not sugarcoat this. The chart structure has taken a heavy hit. Look at this black ascending channel. This line was our lifeline for months. But look closely at the blue arrow. We didn't just break it. We performed a textbook bearish retest. We rallied back up to $3,091, kissed the black line as resistance, and got rejected immediately. Technically, this rejection is exactly why we are dumping today. The structure turned bearish. However, if you sell here because of that chart, you are walking into a trap. Why? Because of the whales. Switch your eyes to the order book. This is what the retail panic sellers do not see. Right below us, sitting between $2,815 and $2,800, is a massive institutional buy wall. Look at this order, $16.2 million, sitting at $2,815, and another $7.2 million right below it. While you are panic selling your ETH at $2,825, a whale is sitting there with a giant bucket, ready to catch millions of dollars worth of cheap Ethereum. They are defending this level with serious cash. The liquidity map confirms it. We are diving into a deep pool of long liquidations around $2,800. My verdict on ETH is clear. The structural breakdown caused the flush, but the whale orders tell me the bottom is inches away. Do not feed the whales your cheap coins. Finally, we arrive at the bloodiest battlefield of the day, Solana. Soldiers, look at this chart. The reason for this 8% crash is staring us right in the face. See this massive black descending trend line? We rallied right into it, touched the resistance, and got violently rejected. The bears were waiting there. Technically, this is a failed breakout. That is the ugly truth. But before you panic sell, look at where we landed. We are currently trading at $117.07. This is not a random price. We are standing perfectly inside this beige support box. This level has held as the floor for months. Look at the stock RSI at the bottom. It is completely floored. We are oversold at major support. Selling here is suicide. And the whales agree with me. Look at the order book data. Right below us at $115, there is a massive wall of buy orders. Look specifically at this cluster. $2.6 million and $2.4 million in buy orders are stacked right here. Institutional money is not selling this dip. They are bidding this dip. They want your cheap Solana. The strategy is simple. The trendline rejected us, but the golden zone at $117 is catching us. Ethereum and Solana have both taken a hit, but they are landing on whale-protected supports. The market is shaking out the weak hands before the next leg up. Do not be the liquidity. Now let's wrap this up. Soldiers, the final piece of the puzzle is psychology. Look at this gauge. It reads 38. That is fear. The average retail investor is trembling. They are looking at the red screens and panic selling their bags to the whales we just identified. But in the war room, we know the golden rule. Financial opportunity is born in fear and it dies in euphoria. This orange zone is not a warning to flee. It is a signal that the weak hands are leaving the battlefield, leaving room for the strong hands to take over. Let's connect the dots. Ethereum is sitting on a $16 million whale buy wall. Solana is resting in the $117 golden support zone. The crowd is in fear. When you combine whale accumulation with retail fear, you get the perfect recipe for a reversal. The data suggests this is not the start of a bear market. This is a high leverage shakeout designed to take your coins before the next leg up. The market is red today, but your strategy should be green. Do not let emotions dictate your actions. Let the data dictate your actions. One last reminder, the markets are risky. I am a strategist, not a financial advisor. Manage your risk, use stop losses, and never trade money you cannot afford to lose. If you want to survive these dips and thrive in the pumps, you know what to do. Subscribe to the channel and turn on notifications. We don't panic here. We prepare. Hold the line. War room dismissed.